I've just been speaking here in Belgium on a conference on future trends, and one of the things that's very much uppermost in people's minds, at least in October 2007, is the US subprime crisis. What's happened in the real estate markets? How on earth did we get in such a mess, and why is it that we're getting such contagion around the world? Well, one thing that's very interesting is this. I remember when I first started lecturing on global trends, which was 10 or 12 years ago, and my background is I'm not an economist and I'm not a banker, even though many of my clients are some of the largest banks in the world. But because I'm a physician, when I first started going to dinners with bankers, I'd go around the table and I'd say, and what do you do? And this guy would say, he's from retail banking. And I'd say, oh yes, fine. And what do you do? And he'd say, well, I'm from commercial banking. Fine. What do you do? I'm in foreign exchange. Okay, fine. And what do you do? And then this guy would go into a long sentence and then another sentence, and about 2 or 3 minutes later, he's still explaining what he does. And I would see the rest of people around the table, their eyes sort of glaze over and they're getting a bit bored. And I'm thinking, oh yes, it's obviously because I'm not a banker that I don't understand what he does. It must be, you know, these are very intelligent people, I'm just stupid. Well, after a few more years, I began to suspect something. And, you know, I think it was when I started lecturing to hedge funds that I realized there was a fundamental problem. And that I started to realize that a significant number of people around the table from the own institutions also didn't understand what these people were saying. I remember before the subprime crisis hit, I was at yet another dinner with a whole load of bankers, and I was yet again about to get up and speak about the future of financial services. And yet again we were introducing ourselves, we went around the room. And, you know, the retail guy, they all explained what they were doing, and then came the long speech from the hedge fund guy or the guy in sort of financial intermediaries or packaging processes and all kinds of other complicated stuff. And he started to go on his 5-minute spiel summary of what he was trying to do. And I stopped and I asked everyone else at the table, I said, forgive me for asking an embarrassing question. Do any of you have the slightest idea what he's talking about? And the answer was, no. I then turned to the individual himself and I said, do you actually understand what you do? He looked down, went a little red, and he said, well, no. There's things I don't understand. He said, I get up in the morning and sometimes I'll take a day off from work and I walk the dog, I go for a long walk in the countryside, and after about 3 hours of trying to work it out again, I can just about understand what one of these very complicated products is actually doing. You know, buying from one organization, factoring against this, selling elsewhere, packaging it elsewhere on that, and how it actually is structured. And I can explain it to my boss in about 15 to 20 minutes when I go into work then, but the following day I've sort of lost it again. Well, I tell you, that's scary. If you've got a situation where you've got very, very intelligent people, some of the greatest minds in financial services, who cannot explain in a single sentence what they do. They cannot even explain to themselves very easily in 5 minutes what they do. And you tell me that the CEO knows what they're doing? The chairman knows what these guys are doing? Are you telling me that the non-executive team who is supervising that bank knows what they're doing? Are you telling me the financial regulators know what they're doing? No. So of course we were set up for a fall, and it's not just the subprime crisis. I mean, we've been set up for a fall in financial services for some time, and there's plenty more to come. Why? Because when you've got such complicated products which are tying huge numbers of institutions together in ways which are not obvious, which are not transparent, which are very hard to regulate or examine, which are hard to price even when something goes wrong, then you have a recipe for chaos. Because the future is not about banking products. The future is about emotion. It always has been. And it's all about investor confidence. And when crisis comes, investors start flying to what they think is safe. And they fly away from things they just don't understand, which perhaps they shouldn't have invested in the first place. So that's why we're seeing a big simplification of a whole range of investment products right now, and a whole range of financial services transactions between banks. These things are going to be much more straightforward in future. They will have to be. But then watch out, because we'll soon find that financial institutions will look for the extra way to add value, and that will be an even more ingenious way of packaging things together than anyone else has thought of, and once again we'll then see a new cycle of risk-taking. So watch this space. It will be an interesting time, but between now and then, who knows? And while the global financial system may weather this particular crisis relatively well, you can expect more to come. And the real problem this time round will be the real problem next time around, perhaps in a different area, and it's the same, which is that when troubles come, banks need to be able to look at their balance sheets and say instantaneously what they are actually worth, what they as an institution is worth, and what the components of their business are worth. But in the recent crisis, it's been impossible to put a value on the risks that they've been taking and on the assets which they own. And that was one of the scariest things of all, and will take some time to resolve.